Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. And this stream's about integrating Bookmap order flow tools with auction market theory using the volume profiles of chassis in the intraday developing time frame. Now, this is based on structured trades, and these are available to all of you in the Bookmap Discord Trader Lab community. Just for those of you who aren't aware, Trader Lab's a group of like-minded traders who come together to leverage their collective experience. It is really about the business of trading, and it doesn't matter how long you've been trading, what you do, how you do it. What matters is if you find yourself working hard, but waking up in the same place with random winners, but not a sustainable process, you may have fallen into the trap that most of us have in our development, and that is random outcomes in a random environment. And it's very easy to get fooled thinking that winning trades is actually sustainable. Now, that may sound really like a contradiction, but the reality of this is everybody has winning trades. It's not the problem. The problem is, of course, having more winning trades than losing ones. And the only way to get to that place is to know which trades actually have an edge that favors you versus an edge that favors the other participants and not you. Because if you knew the trades you take, even though they have winners, were actually losers over time, I can assume you wouldn't keep doing it, wouldn't you? So if that's the case, how do you differentiate between what's an edge and what isn't? How do you understand the business you're attempting to be in versus the fantasy of what trading is? When we come into the business, we kind of have an idea of what, or a fantasy at least, of what it is. Click the mouse, play a video game, it's all wonderful, and there's an ATM in the basement. Unfortunately, that's not what this is. So you may try to fit this business into this fantasy that you have, and take outside experiences that you've had in the world, your world here on planet Earth, if you will, and try to mold trading into those things that are truthful for you. But trading doesn't fit this world. It's like being on an alien planet, and instead of trying to force that alien environment to your level of comfort and familiarity, you actually have to adapt yourself to the environment. I hope that makes sense. Because in spite of the winning trades that we all have, that's not a challenge. In fact, anybody with a random buy or sell generator will have winning trades. That has to tell you something. So it's not the mix of indicators, mix of time frames, and the randomness. It is operating in randomness with statistical probabilities. The idea of Trader Labs helps you understand the business and then potentially put you on the path with trades that you can vet that are structured, so you can replicate them and then find when do they apply, when don't they. There isn't a one size that fits all, whether it's one trader or one market condition. But you can define the market condition and isolate trades that apply to the specific condition, and then over time see if you can extract an edge that is sustainable and fits your psychology. That's the function of Trader Lab. That's why it exists, and there's no cost for it. Now, I have to mention everybody. Thanks, Stephen. Thanks, Marty, Matt. I have to mention to you guys that I'm streaming from Costa Rica. I'm on a laptop, and the internet comes and goes as well as the laptop. So if I drop out, be patient. It will recycle. It might take a few minutes. YouTube will restart, and I will be back. So please be patient with that, and thanks for your patience with me being in the jungle. This is probably the last year I'm coming to the jungle, but it's part of the thrill of, if you will, the joy of having a business that you can operate from anywhere in the world. And those of you who've been following the stream for years know that I am basically all over the place. And being that it's about 84 degrees here today, it beats being in Chicago when it's below zero. What can I say? General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only. If we get into real time, we'll talk. Now, this morning has been extremely active. And for those of you who are, the thing to understand is when you get volatility, what can happen to you is you'll get triggered by FOMO. I call this hide. And hide is always with us. Fear of missing out, fear of loss. So it pulls us in two different directions. One is to wait and be sure, in an environment, by the way, where you can't be sure. And the other one is to chase the market because it's getting away from us. All of these are emotional stimulus, and it's actually counterintuitive to do what you need to do in trading. So we're always subject to these impulses, which are really primarily wired into us. So we have to learn about ourselves. Now, you may think that you're interested in learning how, quote, how to trade or become a profitable, sustainable trader. But part of that process is actually learning about yourself. If you don't understand the things that cause you to do things that are not in your best interest in this business, then you're going to keep doing them. And that, I think, is more difficult than learning to trade. I believe anyone who comes to Trader Lab and does the work can learn how to trade. But if you don't understand yourself, you'll never understand the most important impediment, and it's you. Interesting, isn't it? That's probably not what you believe, but that's what you'll find out. And anyone who's been in this business understands that question we all ask ourselves: why did I do that? I know I'm not supposed to do that, but why did I bail out? Why did I move that stop? Why did I skip that trade? Well, that's why. So you need to understand why, and then build support around the why so you can better manage it. And that is what Trader Lab is about, to help you understand it. Speaking of managing things, if you've ever wanted to try a high-tier order flow tool like Bookmap, I encourage you, since the clock is ticking, this goes till December 31st, it's the Black Friday deals. And you can save a substantial amount on Bookmap subscriptions. If you ever wanted, even on a monthly basis, to get your hand on Global Plus and data, you can get 60% off for 1 month, or add-ons 50% off. And the add-ons, you can get a package of them or individual ones. Whatever suits your groove. And you have up until December 31st. Go to bookmap.com if you're inclined. Check it out. Even if you don't subscribe, this is probably the best opportunity of the year right now. We all say, oh, Black Friday, wait till Black Friday. Well, you might want to look at this. I wish they had Black Friday sales when I started with Bookmap. Now, this is the trading process hierarchy. Basically, what I do is I want to keep this as simple as possible. I keep it simple because if you can't learn simple, complexity is going to obscure and create conflict. And now in Trader Lab, we have traders, some of our senior traders have been trading about 50 years. I've been going on 47 years, both professionally and out here with you. Everybody's got a different, history, background, and even belief systems and process. So it's very important, I believe, that you put a stake in the ground and you develop one trade to vet. It's kind of a proof of concept or a pilot program, if you will. Think about this. If you're going to build a widget, would you do a prototype? Wouldn't you prove to yourself that you can manufacture a widget and that you can sell it profitably? Understand what the overhead is, cost of production. Well, in our business, overhead cost of production is what we pay the other participants. Or losses, if you will. But in the casinos, they operate the same way. They pay the gamblers. Are those losses or overhead? How do you experience it? Well, if you have a statistical edge, just like in gaming, then you're going to pay the other side. It's not right or wrong. It's overhead. We don't experience it that. We experience it as a personal failure, or, gee, I'm not intelligent, or we're looking for validation of our self-worth. These are the psychological elements I talk about, but the business is different. So you need to learn about the business and separate your emotional needs from the actual business you're in. Understand your emotional side. and learn to recognize it and how it interferes with your objective to operate a business. Two separate elements, right? But they intersect and they are conflicted. And your emotional status, emotional wiring will supersede your intellect and intentionality. So you may intend to do something, but you don't do it. Why is that? I will not bail out of a trade and then you do it. Why is that? It's all the pre-wiring or emotional triggers. So you got to learn about it and then learn to manage it. You can learn that in Trader Lab. So what is the process that I use? And this is simple. Guys, trading is not complicated. Most of us gravitate the complexity because we think the answer is hidden, like between the lines. They're not. The answers are right in front of you. And as you bring more input into the equation, you're going to create more randomness, more conflict. You don't need any of that to become a potentially profitable, sustainable trader. Strip it down to its minimum inputs. Blackjack, as an example, is just played with 7 cards. You know, they cut the deck a certain way. They do, you know, whatever they do, but it's always the same. If a casino doesn't use random inputs, why would you think that you using random inputs somehow gives you a statistical edge that you can replicate? You can't. So let's use a proven business model and build a foundational base that you can build a potential business off of. That's the idea. So what is this process? Auction market theory is very simple. It's shopping. You know how to shop? You already know how to trade. Now, obviously that's a little simplistic, but what it is you understand pricing. In the markets, the reason we have a market is for it to figure out what something is worth. And the way it does that is through rotations and pricing. If a price is too high in the store, volume dries up, less people are going to buy it, right? If it goes on sale and the price is too low, buyers are going to put it in the cart, but the sellers won't leave the price on sale, right? And they raise the price up. And then the buyers still buy it. And then it gets to a retail price or a fair price, and then buyers and sellers say, okay, we'll do business. That's retail. If it's not too high, you think it's fair, you buy it, sellers sell it. So this rotation of pricing happens in all time frames as you think of it. Now, the store, call it a high time frame. Prices don't change much, but there are sales, right? If there's a price that goes too high, you may not buy it. Either you'll pay it, but less will, or you'll go to an alternative product. You see what I'm saying? So this is how the auction works. Now, how do we see this auction? It's the volume profile. Volume profile is just pricing. That's all it is. It's not an indicator. It just shows us the difference from one price to another as far as volume. And so that the idea is when you look at a price, is it equal to the price that was 5 points lower or 5 ticks lower? They're not the same. So we need to know the difference to see where that buying or selling dries up and where the fair price is. Time frame is something that we all have to figure out for ourselves. As day traders, primarily, we're operating in a shorter time frame or rotation, yet they're all integrated inside each other. So, you know, higher time frame, depending what you call higher, and then down. And most of you use the clock, you know, 60-minute, 15-minute, 5s, whatever it is, daily, and the rest of it. That's all fine. But when you get into the intraday developing time frame, it's really not clock-based, it's participant-based. That's where order flow comes in. Now, the big dilemma for all of us is what's the context? Now, what is this context? It's the condition of the market. Is it rotational? Is it directional? Now, the other part of this is subject to time frame. It might be rotational for some of you, and for others, it's just trending. There's the conflict. So you have to already know the locations where a trade might show up, and in your pre-market plan, have these locations mapped out. And the other part is, as the market or the trade develops, it's going to give us hints of what's too high, what's too low, what's fair. And as we rotate, we're going to move away from these different areas. And that creates our movement in different time frames. And this is conflicting. So we have to try to find a location or a process that where we can sit back and anticipate behavior, but not predict it. So we're not in the business of prediction. We're really in the business of alignment. I hope that makes some sense. Now let's go take a look at Bookmap. I'm going to try this. Okay. Now, this is yesterday's. Let me just make sure I'm in the right place. Okay. Yesterday's low, RTH open. So we're opening outside of yesterday's range, outside of value. This is the overnight volume point of control. What this represents is the retail price from the last auction. Remember, retail, high volume. What happens in your store? The mustard's $1 a bottle. Everybody buys and sells mustard at $1. So in the last auction, the ETH, this was the fair price. If we go back to yesterday's fair price, it was here. So let's think about this like the store. If this is the fair price and it becomes too high, which we won't know, then think of it this way. Shopping. Have you ever noticed sometimes what was fair yesterday, but you don't want to pay today? I think that's overpriced. I'm leaving the store. Now, this is so simplistic, and I'm not making it simplistic to insult you. I'm making it simplistic because it doesn't have to be complex. It doesn't have to be this magic mystery that somehow nobody understands. Most developing traders think the more you pile on, the more certainty. It actually is the opposite. The more you remove, the more clarity. So we can never get certainty in this business, but we can remove noise to attempt to get clarity. And I always say attempt because who knows? Now, I'm going to give you some statistics. These are available in Trader Lab, as well as 60 PDFs of structured trades. Repeat the 7 cards. There's 60 PDFs of structured trades, as well as a library of webinars, and of course the Trader Lab community. All this is available to all of you at no cost. There's a link in the bottom of YouTube if you're inclined. By the way, if you're visiting YouTube, please leave a like. Let me see here. If you have questions, please post them. Hold on a second. By the way, remember I'm streaming from Costa Rica, and things do get funky. Like the monkeys swing on the tree over here or grab a power line. It's not good for the monkey, but it's not good for the power here. So this is the retail price from yesterday. Fair price. If it becomes unfair, we can come back and check it. We can do anything. Here's another thing. The last auction is the overnight or ETH. This is the retail price. So what do we know? This might be too high. We don't know. This is now lower than that. We don't know. Yesterday's low is here. How about that? And we open somewhere outside of yesterday's range and outside of something called value. So the market's out of balance. Now, what else do we know? Now, what's interesting about yesterday, we were pretty much all short going into the RTH close in Trader Lab, if that's part of your plan. And we're doing something called mean reversion trading. Now, mean reversion's outside in rotational trading. I think it's the most basic and important skill you can learn because the market rotates. And if you can recognize the behavior, then the job is to attempt to get outside to come back in. So remember shopping. I'm not paying that and then come back. Okay. So we were looking for this thing to fall out the bottom yesterday. Didn't do it. And our target yesterday was to try to get down here into the 40s. And there was a gap below us. And we just didn't get there. And then it did it in the ETH. In fact, it did it in the ETH. And we have somewhere down here. Got to find it. Where to go? ETH low. I'm probably missing it. I think I am. Guys, where's the ETH low? Did it fall off my chart or is it covered up? $32.75. Okay. So the ETH low is right in here. The target is approximately here. And this is called the naked volume point of control. Let's just use some terminology. If a high volume area is not checked, it stays open. And remember what high volume is. It's your retail price. So trading is shopping. And really what the market's purpose is to try to figure out what's too high, what's too low. What do we know? I don't know. So where might it go? Well, if this is too high, then we might come back and check what was previously too low. And then we have statistical probabilities. Now, we're opening lower, outside of range, outside of value. So let me tell you what that might mean. Market's out of balance. So the first thing we got to figure out is, do we get buyers taking advantage of the lower open, or do we continue lower? Well, we could do either, so that doesn't solve it, right? So what might we do? Depending on what we do, we might get long to check up here. And if that's too high, we might, I'm always going to say might because nobody knows, we might turn the barge around and then look for checking here. So coming up from here, there can be this, 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 and up, or come up and then fall out and come down here. Now, the joy of trading is we don't know if, how, nothing. So that is to be determined. So this is kind of the lay of the land. Thanks, Marty, and everybody. So we're opening lower outside of range. So statistically, I'm going to give you some statistics. These are available in Trader Lab, and you have to vet everything, okay? Naked volume point of control from yesterday, opening lower outside of range. And these are available in Trader Lab. You have to vet everything. Let me find it. Lost it. About a 30% probability to go up here. Overnight volume point of control, an 80% probability to get here. ETH low, 69% probability. Value area low, about a 68% probability right there. I think I gave you overnight VPOC about 80%. Yesterday's low filled the gap, which is not a reach, you might say, 68% probability. And then taking out the previous higher low, 68% probability. So basically filling the gap, so getting up here. And then we have this down below, which is open. That kind of gives us the lay of the land. So let's see what it does. Is everybody tracking so far? So what is the condition of the market? Well, if we open outside, then there's a couple things. You can open and keep running. But what else do we know? We know the market is short from yesterday's RTH. And one of the things to always think about is if the market's out of balance, in other words, we have shorts, then we can rotate up and squeeze the weak side out. And then you have to see, do we just keep going and it's a short squeeze, or is it just a weak squeeze? And that gives us an opportunity for continuation selling. And the answer is not anywhere other than the behavior. So try to keep it simple. So let's go see what happens. Is everybody tracking? How are we doing? Okay, so RTH open. This yellow line is called developing volume point of control. Think of it as your shopping, retail price. And the way I use this, now let's look what this is. This is the retail price, remember the store, fair price from the last auction, which is the ETH. I'm opening under yesterday's low, so a little gap, and I'm opening under the last high volume price, retail price from the last auction, and I'm outside of yesterday's value. Value 70%-ish of the volume from the previous day. So it's all out of whack. We're out of balance. So, and remember, the market tends, to come back and check high volume. So that's why this is 80%. And then we have another level up above. But what the statistics don't tell you and what you need to understand is the mechanics of the market. And if we're short in here from yesterday, we can counter rotate and take some of those guys out. Now, Part of the thrill of randomness is you don't know if it's going up, down, or how it's going to do it, or if it's going to do it. This is our problem in a rotational environment of trying to determine what do we do. So the trade plan answers the questions, not what the market will do. We'll never know that, but it answers the question of what you're going to do. And that's why you have to know what you will do. You don't ask the questions in the market. The answers are in your plan. Not the outcome of one trade, not the ability to predict anything. You can't. It's the process that has edge. And after that, you don't do anything. You don't participate. You don't do anything unless your trade shows up. It's like a bus. Hope that makes sense. Now let's go take a look. RTH open. So we get our open and we get, what is going on here, Tom? Squeeze. So the shorts that are in here, I see aggressive buying. Now I'm looking at this. Now, what's interesting about this is, depending on the behavior, I can be very patient because I'm detached. Most of us, until you kind of get used to this, are going to be chemically triggered. It's getting away. Think about your dog. No offense to anybody. You got a dog, squirrel runs, and the dog sees the squirrel. What does it do? It lunges. It's triggered by the prey. It's a primal wiring thing, and it lunges at the squirrel, or if you're from New York, pigeons. I think it was George Carlin, if you remember him, a comedian. He said pigeons, that little purple around their necks is really an oil slick. If you're in New York, you'd understand that. So this is our retail price from the ETH, over 80% probability, and this looks like potentially aggressive buying. I get a sweep here. Now, this suggests a couple of things. Now, this is not a trade for me. We're in here about 15 seconds. So in 15 seconds, I blinked about 3 times, maybe a little more, and I'm going, what's going on? So this I call a variable high volume node. And what I'm doing is I'm tracking the high volume as it migrates. And what it is showing me in real time is the developing perception of valuation. Shopping, retail price. Well, what happens if this price is too low and I leave it? Well, if there's more volume here than up here, now this is the new retail price. And it happens to be pretty much right on top of this. So I'm going, that's nice. One moment. Gavin, you're asking me if we're looking for a reversal at the low a day. Well, I don't know where the low a day is yet, unless it's already in here. I can't see it. But I don't look for anything anywhere. Look for a reversal. Well, if there is a reversal and there's an edge and a structured trade there, then sure. But currently, and I can only tell you what's happening here because this is all I have in front of me. I'm going to do is I try to do in this stream, since I don't have the time anymore. By the way, if you want to see this process in real time, I have 4.5-hour streams that are in the Trader Lab library, and you could just see this as it goes, and good, bad, ugly, and everything that happens in between. But what I like to do here in this stream is show you how to read the market, and this is a language. I don't use indicators. Now, I'm not saying you can't use tools, but if you can't understand what's happening right here, those tools are just noise. So you have to understand this as a building process. Isn't it interesting? You can become a profitable, sustainable trader with nothing more than this if you can learn it. Okay, and of course, order flow and some tools. But you never have to go beyond that, and you never have to go beyond a couple of trades that have an edge to become a profitable trader. Now, all of us are in a hurry for more profits, more trades, and that's just FOMO. If you don't build a foundation of understanding of how the market works, all the rest of it is not going to be material because you probably will not be here in spite of the random winning trades. So what this is, new retail price. What does it say? Too low. New retail price. I push away. Now, this is yesterday's value area low. I'm now pushing inside. So if I get into value, then I have to be aware of where my next area is. So once I get in here, this is my next potential location because it's the retail price from yesterday. Now, going down in quote time frame, no time here, remember, too low, new retail price. Now, the thrill here is the market doesn't have to go anywhere. The rotations are random. You don't know if, how, what. So if we know we don't know, then your process has to accommodate randomness. So that's where a trade plan comes in. So let's see what's going on here. So reading the tea leaves, VWAP mid. Now right here might be too high. Let's look at the language. Too low, new retail price. I either break here or go there. I break high. Now, new retail price. Break low. This is the first suggestion. Maybe that price is too high. Now, we don't know. Let's look. This is resistance right here. See the change in behavior? I call this VPOC migration. I made it up. I didn't know what to call it, So early on, I started looking at behavior. And at first, I could, of course, like everything else, you can't figure out what does it mean. But, you look at something long enough and you understand that trading is a pricing mechanism, and that's the whole purpose of the market. So if I know this was the retail price in the ETH, and I know this is the retail price from yesterday, I know I can go here. What I don't know is how, if, when. Don't know any of that. So right here, this might be too high. I label it. Now, for this to go higher, I have to clear this, right there. Very volatile, very choppy. So let's look. So right here, this becomes resistance. Break here, this is resistance. We have our VWAP here, and this is support. No clue. This is resistance, absorption here, and a sweep. This is suggesting an upside rotation. This is resistance. I always suggest to developing traders, don't trade here. Too fast, too furious. We're in here just a couple of minutes. Nothing to do. Watch. High volatility. High volatility. So this is on the hip parade, and so is, and once we break under here, guys, opening swing low is here. If we can't get back here, then the possibility is to continue lower. This is support, right? So right here is your resistance, potential to go lower. You get a sweep, come right back inside again. And once you're back above here, you'd be out of your short. Had a nice rotation off of it, almost 10 points. This is speed. And in speed, you can get chopped up and really get abused. Next target is up here. For me, might take one of these, take the short, come up here, get taken out. It's all subject to your plan. Now, this is another area to sell. Let me show it to you, only because what it means. Let's look at it. So what I tried to do is I tried to identify what I think is a dominant side, and I also know it's in this volatility, everybody might have a hard time with it. Okay? Let's see. I want to show you a short up here. Now, in many ways, we talk about something called mean reversion. Now, this is going to throw you a little bit. Here's why. The market moves, as you guys know, multiple time frames, right? Well, reversion takes place in multiple time frames. If this is yesterday's retail price and I come back to it, I'm reverting to it. If it's too high, I can now revert back here to the developing retail price. Does that make sense? So when it's going up, no clue. Going to the moon. I'm inside of range. I'm inside of value, going to the moon. But before I can go to the moon, I need to check the highest volume. And in the store, if yesterday's price, which was the high volume, is too high now, based on the perception of the participants, I can revert to it and reject it and won't know. So one of the ways to do this, now, and let's assume you don't have a long, you may, and I can't say what you would have, it's your plan. But what my plan is if I get taken out, I'm not going to FOMO. I have to wait for locations to evaluate. That's what I do. Not saying it's a good plan. I'm just saying it's a plan. What else is here? Settlement. So I know this area is material. Do I have an approach? I'm getting a question you can use to determine the dominant side. You have to narrate it. And when you're in two-sided trade, you really need to be looking at, I'm getting the question is, how do you determine the dominant side? Well, we're in a two-sided trade. So in here, there's no dominant side. It is a fight. So it's switching from sellers to buyers. Here's the thing. When you come to a location, you already know where it is, and we know what created it. We don't know what will happen. If we are approaching a location, there's a few ways to use them. If you were long, if that's your plan, this is a target. If you're not long, then it's still a target to observe for a short. It's one or the other or both. I tend not to try to flip around. I'm just more patient. I'm not in a hurry. I'm just patient. When you have all day, let's just say I've paid the price for FOMO, more than I care to think about. So I don't respond to it. I still am human. I still feel it. But if the market runs away from me or I'm on the wrong side of it and I get stopped out, then I'm just going to pause a little bit and say, well, is it just a location or is it just ripping and something is changing? I can't tell that until hindsight. So I don't have the benefit of foresight, but I do have the benefit of knowing market mechanics and where these locations for change or a test might take place. So that's what I do have. After that, it's just random. So right here, I have a sweep, which is not material. It is suggesting higher. Right here, I have a location and settlement. So this is an area. So all I'm doing when I'm sitting up here is I'm looking at this. And what I've done is I've left the retail price, which is this yellow line, in the developing time frame. I've left it. So I'm inside of the range. And as far as I know, we're just going to keep going, because how would I know it wouldn't? Right here, I have liquidity. But here's the important piece. You guys have heard the saying in real estate, location, location, location. This is what trading is about. It's the locations. And it's not precise, which is what we all want. It doesn't exist because of slop, momentum, buy stops going off, and I'm seeing selling icebergs and buy stops. Now, right here, I have my liquidity, I have my location, and no way to know. So let's look here. So here is volume, break low. This is now resistance, but I'm right at a location. Going higher, going higher. Right here, I break. Notice the change in the rotation. So up, Where's my down rotation? What's that? That's nothing. That's a burp. Here, going up, going. Now right here, there's a change. You see this rotation? It's different, isn't it? So now I know my sellers took control here. So how do I get into this thing? Well, what do I know now? I know this is a retail price from yesterday. Maybe it's too high. I know I've tested it. Maybe this is too high. I know my sellers right here took control and I have a rotation. So now the possibility is to come back to where the sellers took control, this area, and I can sell it, and my stop's got to be out here above this liquidity. So this is a potential short if you have it vetted. Let's see what else I got here. So this is where the sellers take control. Soon as the sellers are taking control, I'm looking for an entry. The way I typically suggest developing traders enter is not to enter here, but to recognize a trigger. Then you can look here. Let me show you what you look for. Don't forget location, like real estate. This is a high volume structure, and this happens in multiple time frames. So this is from yesterday. I'm watching my GPU temperature here just so you know why I'm looking at that. High volume is here, microstructure. If I put a little line here, this is now high volume. What this is saying in here, this is the retail price, developing time frame. When I go up in time frame, as you think about it, this is yesterday's RTH retail price. And the market has a tendency to check retail prices. Let's also, so I don't, right here, no clue. The change is here. So where did my sellers take over? It's really right. Buyers are here. So buyers are there. Buyers are there. Going up, buyers are there, going up, sellers are here. So I have this outside edge. And you can define these by these outside edges where the volume tapers. So I got high volume here. I've got low volume there. So it's a rotation. And this is where the sellers were, the liquidity was, and the location. So I kind of put these together. So when it breaks down like this high volume in a shorter time frame, and it's kind of there and there, is the same as this. Higher time frame. Now I'm going down in time frame. This sweep suggests a counter rotation. This could be a short. This can be a short, but let's assume we're using structure. Here, your stop needs to go there. And then this is your scale. Here's what it's doing. This is reversion, and it's multiple time frames. Let's talk about it. This is reverting to this retail price from yesterday. This break now is reverting to this in here, this high volume. So when it breaks away, this was too high. And there's no precision. One of the ways to do this is where the buyers were, which was here. That's what gave you your up rotation. You can sell it here, but your stop's got to go out here. So this is your risk. That's too much for you. It doesn't qualify. It's up to you. Or you run a tighter stop, up to you. This is the minimum. And the thing with this is you've got this and you've got this as resistance. So you could run it a little tighter, your call. You have to vet this or you pass on the trade. Now we're coming back, reverting here. It's all the same. We're just doing it in different time frames. This is your scale, and then you are going wherever it gets you. And that's trade management. Let's just see what it does. Where's resistance, by the way? Wasn't it here? So what you can do with this, if you take a short here, you scale there, and your stop's got to be above this thing. You get a sweep. This is another short. Your stop is not there. It has to be outside above this liquidity. Now, if you got scaled, you got taken out, you'd have a profit. If you didn't get taken out, this is another short. Let me move this over so you can see this. I'm using structure. So all I'm doing is something not complicated. Remember, trading rotations are random, but we're trying to trade the behavior. When I come up here, I have a sweep. When I have the sweep and I get another trigger, I can sell it for the same trade again, coming back here and then looking for it to go lower. Same trade. Same trade. You see it? Has everybody seen the structure, guys? How are we doing in YouTube? How do I identify in YouTube a sideways day? Well, it's the rotations, really. This is mean reversion. So this is rotational trade. Now, the trend can be moving, but the market can be rotating. This is where time frame comes in. So it is a rotational day so far. So it's two-sided trade. So you can pick a side until it changes. All these are shorts here. Short. And what is capping it? It's this. So as long as I'm coming back here, the market's going, is this still too high? Well, yeah. So if I come to location that I've rejected, and now I'm using order flow, I can see the sweep, and it pulls back there. I can sell it, scale here, manage the trade. You could be done with the trade here, or you're just keep your stop out here, and it's kind of like you're a cowboy and ride the Bronco. Or it's plan based though. It's not anything more. You can't predict. I can't predict. But what I can do is understand market mechanics. This is too high. This is too high. Sellers are here. Sellers are here. All these are short coming back here. This is called mean reversion. It's the trade I suggest every trader learn. And by learn, I mean be able to execute and deal with your emotions. It's the primary behavior of the market. Rotations, price checks. Now, there's a naked volume point of control down here. What is that? It's the same as that, except it's from the last time we were down here. So what might we do? If we're trading reversion, what are we doing here? We're selling this, and we're going to target eventually this. Not a recommendation. Who knows, right? It's all random. That's our next target. So what you could have been doing this morning, and this is up again, plan specific. For me, I pick a side, and the question was, what's the dominant side? As long as I'm not above here, for me, I'm only taking shorts. Other traders take longs. Other traders flip-flop, all over the place. They're whirling dervishes. No offense to the dervishes, but that to me is not how you build the business. And again, not what I say. It's what your results are. This is a short. You're trying to go there. So short to there for scale. Short to there for scale. Target here. Now this is interesting. Now this trade could be done right here. Trade's over. Back in the Barca Lounger, if that's your plan. Depending on what you do, your trade could be done right here. Trade to a target that is the same structurally as what was too high. The market has a tendency to come back to try to figure out what's too low. Is this price still too low? And there's another little piece here just to kind of get you going here. Is this too low? Well, there's no precision. The trade could be done here, and now you're done, and you wait. There's over 90% probability to take out first hour's higher low. So let's see what it is. So this is called the IB, initial balance. And if you look at the statistics sheet, it's almost a 98% probability to take out first hour high low. Go pick one. I would suggest potentially that we have to be keeping an eye on the low side, right? Because unless we can get back into yesterday's range and get above here, which is the first hour's high, we are kind of leaning to the south side. So let's see what we do. It's very rotational. So what do we know? This is too high. VPOC migration. What does it say? This might be too high. And I'm getting these. So it's moving lower, which is saying this price, the fair price in the developing time frame, is too high. So as it's moving down, that's pressure, because that's saying is the participants up here are not willing to pay this. This is your retail price. And what else do we know? That was yesterday's retail price. So you have these naked volume points of control are like anchors because they are from the previous markets. So once they're established, if we don't return to them, they're still open. In the developing time frame, it's going to move around as the volume shifts. And we can read them in a similar fashion. Too high, too high, too high, and then here we go. Let's see. And this was too low. So if it's too low, I can just bounce off it and rotate in here, or I can reject it and try to find too low someplace. That's part of what we don't know naturally. So we're back in two-sided trade here. So there's still a possibility here to come out. Now let's go into something a little more shorter time frame as you think of it. So let's now shift the gear a little bit. This is a low volume area, and it was created by this because we left quickly. When you leave quickly, it's a rejection. It's like, I'm not paying that. Everybody gets on the bus and leaves. This is now the fair price. So what do we have here? VWAP, mid, and what's there? Stops. What else do we know? There's stops above this swing, and we also know that this is an outside edge, and it's poorly auctioned. The nature of the market, first of all, is to pick off the VWAP in the mid, and we know that resistance, or a price that's too high, is out at this high volume. And this is, yes, we're outside yesterday's range. So unless things change, we can be looking for shorts to come back here. Not a trade recommendation because this is dynamic, okay? Is everybody tracking? So we're looking for potential mean reversion. Underline the term mean. Now there's a couple ways you can work this, and you have to be very careful here. And here's why you need to be very careful. This is too high. There's stops over this swing. We have a structured trade in the Trader Lab called VWAP to VPOC. We're outside of the range, I believe, or did I just lose that? Oh, yeah, we're outside of the range. So this is a qualified short to their mean reversion. We're outside of range, outside of value. That everything above us is too high at the moment. And what you have here is outside in trading, mean reversion. This is the primary trade that I believe every trader has to start with. And if you can learn to trade outside in and identify outside edges, you can now build out something. You can take all the complexity and all the noise and, in my opinion, throw it away. Because when you have conflict, you cannot have anchored inputs. So throw the noise out, in my opinion. Now, of course, you could do what you want. But I've trained a lot of traders over the years, and we all get hung up in multiple inputs because we're trying to avoid risk. Everything's very clear in hindsight. But if we can simplify this process, then we can concentrate on the key elements. You can always add stuff in later. But this is not complicated. It is still random. So I'm not paying that. Outside edge, retail. Are you kidding? I'm really not going to pay it. Retail. Slug of liquidity in the book. Let's watch. So this is called mean reversion, and you have to vet it. If you come to Trader Lab and you can learn mean reversion, you can actually, and I mean learn it, that means do it and know where your trades show up. I always encourage in Trader Lab, if the market's moving too fast, just wait. We're all in a hurry, but just wait. Have you ever run after a bus? How does that turn out usually? Well, this is the same thing. These are buses. Just wait for your bus. Don't chase the bus. Wait at the bus stop. Wait at the location. Wait for the trigger. Wait for the retracement to the trigger. So location, these are triggers. There's your rotation. So if you take a trigger in here, location, absorption, see the change, trigger, resistance is here. It fails up here. That's your scale. It comes back. Our nature is to bail out about here. Where does the trade fail? It fails out here. What does it do? I call that a stop pick. Look at the iceberg selling. They're selling. Do you think you might be keeping some decent company? Now, it's not a sell, quote, signal, but this is how the order flow can give you some insight. So if I know I have buy stops here, right, from these sellers, are you going to put your stop there? Most retail traders do. Well, what do I know? I know this is an outside edge. And if I know there's buy stops here, my stop is not going there. It's going to go outside. And let's say I didn't get short here. I'm not going to sell this. Since it's the mid, and I know retail trader behavior, write this down. Think like a retail trader. Don't act like one. Then I get this. I break again. I now have my stops out. There they are. I can sell it again, and I'm coming here, and I'm looking to come out the bottom or not. Remember, IB high, IB low, 98% probability to take one of them out. Unless things change, I'm heading for south of the border, which is there. So these are just shorts, Not saying it's a good idea, but let me ask you this. Do you need anything more than this? Other than your fear, which we don't need, but we have because of uncertainty. I think if you come to Trader Lab, you can learn this. And I always have to encourage you, keep it simple. There are some traders in Trader Lab who make it complex, and if it works for them, that's great. That's not the point. But if you can't start and become profitable using a very simple process and then build it out, then you're probably not going to have a sustainable career here. So you just have to start someplace. And you can start in Trader Lab, and I think you can learn to trade. You can build it, but you got to start someplace. And by the way, guys, mean reversion is the most common behavior. That's why mean reversion, if you can learn to execute mean reversion, develop an edge, you don't need anything to become a potentially sustainable trader, but you can build on top of it. So it's not like you're ever done. But you need to understand the elements that give you the ability to trade this are the elements that give you the ability to trade more. The market typically is rotational. Even if we're trending and we're directional, the market still rotates on itself. So in this environment right now, if we think the trend might be down so far, why would we be taking longs? Wouldn't we be just trading shorts and then using counter rotations for trade management and then to re-enter until it changes? The question was, what's the dominant side? For me, it's the short side. So If you start going short, long, and you can't trade the dominant side, then you're going to end up just spinning yourself, overtrading, responding to FOMO, and probably put yourself out of business. So relax, try to identify the dominant side, and until it changes, stick with that side. If it does change, you'll get taken out of your trades on a trailing stop. Your goal is to get risk neutral in alignment with the dominant side and leave the rest to somebody else. Trade management, getting risk neutral, taking your stops when it happens. It's just overhead and cost of production. Relax. Athens, should you wait for a trigger at the VWAP or take it right away? Well, it's not mechanical. I mean, the fact it comes here, where's your trigger? Now, you have to define what the trigger is for you. What qualifies an entry here? Like here. Can you enter here? If this is your trigger, you need a retracement. So I started to talk about triggers yesterday, and I want to revisit this. Let me show you something here. Oh, I had a little data drop out here, part of the joy of being in the jungle. So let's look at this. Buyers are here, sellers are up here. This, I'm not sure what the structure was here, but there's your sellers. Now this is your resistance right there, okay? It's a low volume node. It's right in here. Right there. You see where it broke away? Sellers are here. The buyers were there. Basically, and I'm just going to throw a little line on here. It's hard to see. But we come back. What I know about this, now I know this is too high, right? And now it shifts down here. This is the retail price. This sets up my reversion trading. So all I have now is shorts back to here. But where's my location? Well, I have mid, VWAP to VPOC, and I can't do anything with this. And I know this is too high. I know now I'm getting this outside edge, and that could set up these shorts. So now I have the context. Now I have to get the location. This sets up the location. This sets up the location. So I can sell this. I can sell that to there. Let's see what else. Do I have anything else in here? VPOC migration. This is now too high. Let me mark that. So for me, it's just shorts. Keep it simple. What do you have to make it complicated for? So if you took this, you had your buyers there. It's trade management, guys. This is all random. We come up here. We come back here. Then we're looking for potential shorts, but you also have to be looking at the stops here, and you got to be looking out here. So these are your areas. So as it's coming up, there's nothing mechanical. So I see this. Now, if you can't execute here, then you don't have a trade. This is where the objective is to come here. And if it comes there, then, so you're either leaning against this outside, and if it's not your trade, it just doesn't matter. There's going to be another one. And this is where you're trying to go. The idea of mean reversion, this is the mean. You're always trying to come back here. And then we have over 90%, 98% probability-ish to take out first hour's high-low, and it could be either one. As long as we're outside of range and outside of value, this statistically has a lean. That's all I can tell you. So until it changes, I just stay on one side. I take my lumps. If I get out of alignment, if my job is to get risk neutral, I don't worry about it. I just put the trade on, and I have to rely on my understanding and my statistics. And then whatever happens on one individual trade is not really important. It's that I follow my plan, because over time, the plan extracts the dollars from the other participants. It's not one individual trade, which is always random. Hope that makes some sense. So anyway, at Phoenix, no, I don't take a trade right away. The better way to do it, I think, it's isolate one condition that you can become familiar with. Isolate one condition. And you have to do replays. You have to extract it. You got to find out what are the conditions. What makes this condition favoring the shorts currently is the condition of the market and where we are. We're outside of yesterday's range. Now, if we come back inside, that would change things. And then for me, if it changes, I either reorient in the other direction or I am done. It doesn't matter to me, because we might come back inside and squeeze and take this out, and then I have other trades, or I just am done. I'm here for profit. I'm not here for action. So we always have to kind of differentiate. Why are we trading? Is it, what are we doing here? Are we here to build a business and be sustainable, be profitable? Or are we looking for something to do? And this is part of the psychology of this business, is why am I taking trades? Is it because I want something to do? I want the dopamine, that excitement? Or is it because I actually have an edge? Look at the icebergs. This is big. So we have aggressive sellers going on here. Doesn't mean we won't go up higher, but it means that there's quite an appetite at the moment to sell. So it's not in and of itself a reason to get short. It is a reason to be aware of the these guys, these icebergs are more sophisticated traders than us. So we have to be, and the numbers mean something. It's not just that you see an iceberg. It's the numbers. Very important to remember that. So let's keep watching it. So keeping it simple, and let's keep it simple. Remember, complexity creates conflict, ambiguity, right? If we can remove the noise, whether it's in the chat or in your head, wherever it is, focus on the basic elements, because that is what's going, and you have to start with that. Because if you can't understand the basic elements, you're never going to get to the next place. And you can get more and more complex, but if you don't understand the basics, you're going to start mixing things together, and they're only going to create conflict. And that's probably one of the things about chats that is always difficult for all of us, is because there's everybody in there, and they all do their own thing. Doesn't mean it'll do anything for you. You have to do what works for you. Because it's easy when you're developing, one trader's getting long and you're thinking, well, I think I get short. Well, maybe I should be getting long. Well, what does that do for you? It makes you not do the things that you need to do for yourself. So that's just one of the problems of chat rooms, and Trader Lab included. And it's always been that way. It's not a new phenomenon. Any of you guys who've been in chat rooms, you know what that's all about. By the way, you guys get these pop-up ads. I'm trying to remember where I was looking. I was cruising around somewhere yesterday, and I don't know if they're Google or if they're, Twitter or whatever the heck they are. I don't pay attention to it. But, You see the thing, how I turned $1,000 into $500,000 with AI, the best kept secret. Have you seen any of those? What do you think when you see that stuff, by the way? J Money, no, Bookmap does not show synthetic icebergs. It shows what's available through MBO data. So they're tagged, these icebergs are tagged from the CME. So, and they're really limits. So they show up, but you're not going to see everything. But you get a pretty good idea. Tappage, just sell a few more, you'll help. So we have over 90% probability to go here. Why would you not, given that we're outside of range, outside of value, only be taking shorts? If you're taking longs, you are not aligned, unless it's in your plan. You're not aligned with the dominant side of the market. These are shorts, right? This was too high. If we know it's too high, wouldn't we be only taking shorts? Just asking. Now, that doesn't mean you can't take longs. I'm asking about the question I had earlier. What is the dominant side? What is the dominant side? Do you want to be a buyer or do you want to be a seller? Do you want to respond to noise or do you want to concentrate on the language of the market and the participant behavior? What do you want to do? That's what you need to do. So in Trader Lab, this is really about not only market mechanics and how it works, but you developing the discipline to build out a plan and vet it, and then keep it simple so you can gather metrics and determine whether or not you have a statistical edge with one trade. One trade. Now, we all want many trades. I can't begin to tell you how many trades I've worked on over the years. But the more I removed, the more I got. The more I removed noise from my process, the more clarity. The more clarity, the more easier the decision making was because there weren't conflicting inputs. Does that make sense? Please give a like if you're visiting in YouTube. This is called Structured Trades, Structured Trading. Trader Lab is about helping traders develop a foundation. Now, foundation doesn't mean basic. It is really based on the market and how it works. I don't use any indicators. Doesn't mean you can't, but the more you add, the more you're actually taking away from your ability to make decisions. That's my experience. I actually early on built trading systems, so I thought adding more would create more. It actually created more noise and actually took away from everything. So wasn't the answer, it was actually the problem. So it's just really identifying the condition, hang out, look at your probabilities, understand the condition of the market, understand how the market works, and also understand you're not going to be in alignment with it often. It's going to change. And we only know change in hindsight. You can't walk into this with the idea of predicting. You can walk into the day with an idea of locations. And if you understand how the market works, you can then anticipate where it might go. Not how or if or when and any of that. That's the randomness. So this is our target. This you could right here now you could be just trailing this. Now let's look down below. Next location is going to be this. This is a high volume area in an intermediate time frame. So what I'm doing is I'm slicing the market like an onion. This is yesterday. Too high. We're out of here. High of the day. Do we know that? Nope. After the fact, what do we know? Too high. So that suggests shorts. Doesn't mean you can't take longs, but that's counter trend. It's kind of like counter trend is like the wind in your face. Alignment's the wind at your back. Which one overall, over time, is going to give you a better yield and a better edge? It's not that you can't trade counter trend, but if you can't trade with the trend, where you have everything leaning your way, then you'd have no business taking this, in my opinion. Again, I'm only giving you an opinion. I'm not saying it's right for you, but I'm going on 47 years of doing this, and I've made every mistake I could figure. Any mistake you've thought of, I've done it, and I've probably done more because I had more time to do it. That's all. How are we doing in YouTube? Please give a like if you're visiting. Hope you're getting something from this. This is the Trader Lab. You're all invited. There's no cost for it. Trader Lab is a community of traders. Everybody brings something to the table. You know, it's kind of like Thanksgiving dinner. Yeah, bring something. All right. So bring it. Ask questions. Doesn't matter how long you've been trading or what you do. By the way, the fact you've been trading a long time doesn't mean you're actually a successful trader. You know, I've met many traders over the years who say, well, I've been trading 10 years. I can say, oh, great. How's that going for you? Well, they're not profitable. Why? Because they're doing the same thing and they're adding or removing, and they see something and they just jump. It's all FOMO. And they gravitate to what somebody posts. It's natural. And anytime somebody posts something that's contrary to what we think is the right thing for us, we're going to discount our thing because we haven't developed an edge with it or know it has a probability that favors us, and we're going to basically buy somebody's idea. Doesn't mean it is valid. That's, I think, one of the challenges we have when we talk to other traders. It's normal. I mean, in my development, you know, somebody presents themselves, you know, as an expert, but they're actually a losing trader, and all they're doing is getting ego gratification. You have to be very careful. And that's why in Trader Lab, you have to vet everything for yourself. Doesn't matter what I do or anybody does. I think you come to Trader Lab, you're going to get the straight oil from the can, but you still have to do the work. Nobody can hand it to you, unfortunately, or else we'd all sign up for that course and have our ATMs moved into the basement. Doesn't work, does it? How we doing, guys? You doing all right? Hope you're getting something from this. This is the Trader Lab. Trader Lab is a community, and it's really the thing about Trader Lab that makes it special. Yeah, there's just nobody's going to, as they say, blow smoke, you know, up anything. This will be the most challenging thing you ever do in your life, and it's completely contradictory to what you believe it is and what your experience is elsewhere in your life. You know, we all have this thing that if I persist, I'm going to win. Well, not here. You know, persistence is not the answer, really. It's understanding why things don't work and eliminating the things that don't and keeping superfluous inputs and noise out. Very hard to do because we're always going to gravitate towards something that looks certain. And the only thing that's certain is uncertainty. You have to design a solution in an uncertain random environment. So this just does not follow the rules of the, shall we say, Earth. I always think of this like an alien environment, and we're always going to try to fit this environment into what we're familiar with. But this is not like anything you've ever done unless you own a casino. So you got to kind of differentiate. It takes a lot of work to do it because we're always going to gravitate back to what we're familiar with. And what we're comfortable with. Comfort is not the answer here. You'll always be uncomfortable because of uncertainty. So when you start your day, you need a mental adjustment. I have a thing. In fact, years ago, I made a tape for myself back when we had tape, you know, and it would be kind of a recentering of myself mentally. You know, it kind of like gets you out of your day-to-day who you are, what you think, and how you operate into this environment. Here's what you're going to feel. here's what you have to be careful about because of your primal wiring. Like reminders. And sticky notes, by the way, didn't work. I had more sticky notes on my monitor and these were the CRTs back in the day. They would fall over, but I didn't see them. Once I was myopic and I was into trading, I was concentrating, and all those little reminders didn't even exist. So I had to build out other things, So these are the same thing. I mean, we're all the same that way. So these are things as you're going along that you're going to discover about yourself, your weaknesses, because we're human. It's okay to be weak. It's okay to be human. You can't stop it. What you can do, though, is start to learn about your behaviors, keep a log of your errors, find out what helps with those errors. For example, let's say you have a losing trade. What's your behavior right after that losing trade? Do you create an error? Do you revenge trade? Do you all of a sudden, I got to make it back? Or the next trade, you micromanage because you don't want to lose because of what happened on the previous trade. You see what I'm saying? Do you understand these triggers that modify the behavior that's in your best interest? If you don't record these events and then go back and look at them, you're just going to keep repeating them. Years ago, I created something for myself called an error cost calculator. In fact, Greeny, one of the Trader Lab participants, thanks Greeny, created an error cost calculator so you could start monetizing your errors. I found for me over the years, and years ago I should say, probably in the late 90s when I did it for myself, that anywhere from $5,000 to $10,000 a month was being thrown away, given away. Light a match to it. And it just blew me away because I realized that and at the time, I was working really hard. Of course, I always work hard in this business, that I was already a profitable trader, but I was throwing most of it away. I wrote a check out, and I tell this story because it's just what I did, and I pasted that, and this is back when you had paper checks. Remember those? And I pasted it on my monitor. So I'd sit down to trade, and I'd look at this check. I got to tell you, that really helped because I quantified the cost of errors, and I also drilled into what stimulated the errors and what created a cascading effect of error. It would actually cascade and would kind of exponentially explode. Do you know the answers? This is all part of the journey of trading, and we discussed this in Trader Lab. And in fact, I want to show you what it looks like, hopefully. Here's what the Trader Lab community looks like. Hope we don't blow things up here. I am on a laptop in Costa Rica. Anything can happen. Thanks for posting that. And thanks to everybody who posted Trader Lab. There's a lot going on here, a lot of contributions. Doesn't matter how long you've been in the business, but this is a Trader Lab. Statistics, data mining, research, a lot of great contributions by a lot of great traders. And developing traders, by the way. By the way, when it comes to traders, we're all developing traders. You're never going to be past being developing because you're always going to learn not only about the market but about yourselves. And by the way, here's stop feeding the monkeys. Here's what the library of webinars looks like. Thanks, Ned, for curating this for us and supporting the Trader Lab. It's really appreciated. This is the primer webinar. This one I did in 2021. It's about an hour long. It's got about 36,000 views. You might want to see why. It talks about really what is the trading business? What about anchored inputs? Meet the Trader Lab. What's a Trader Lab? This is an advanced trader methodology. Now, you have to separate the word advanced from complicated. The advanced aspect of this is the simplicity of it. So complexity doesn't give you the answer. It obscures what's in front of you. That's what I found for me. Is there a holy grail of trading? No, but how close can you get? Watch this one. Now, also, day trading, fantasy versus reality. What is it? Are you a gambler or not? Are you just gambling? Day trading. Why most traders using indicators fail. Do you ever ask yourself why there's 200 indicators in your software package? How about this? They all work randomly and none of them have an edge. So you're going to keep going down the path that most of us have gone on. probably, and that is multiple time frame, multiple indicators, random winners, and no edge. Where does that put you? Potentially out of business. What do you think? And I call that trader Groundhog Day. That was me. I coined that phrase for myself. Working hard, waking up in the same place in spite of random winners. Let's not do that. Let's learn. Let's not keep repeating the mistakes. How your pre-market plan creates a trading edge. Do you have a plan? I have a plan when I come in. I certainly don't know what the market's going to do, so it's not predictive. And again, Ned, thanks for doing this. And for all of you, by the way, there's a document section also in here, and you might want to, and Ned, thanks again for curating this, 60 PDFs of structured trades I've shared, stats for illustration, in other words, the data mining that we do, context alignment, the different mean reversion structure. And Matt, thanks for that. This is contributions by Trader Lab participants. This is not about me, guys. This is really about you. So this is what the Trader Lab is. You're all welcome to Trader Lab. You can use the link in the bottom of YouTube if you want to visit the Trader Lab community. Remember, there's no cost. You will not be solicited or otherwise abused. I think we have the market if we want abuse, and of course, most of the abuse we give to ourselves. We do. Not intentionally, but we do it by default because we don't know really that we should only trade when we have an edge that favors us, and don't trade otherwise. Just leave it. You don't need a lot of trades. Think about it, guys. How do you become a profitable trader? Is it by, sell, buy, sell, buy? No. Or is it wait for the trade to come to a location that you understand, wait for understanding market mechanics. Oh, we found too high. We're outside of yesterday's range. We're outside of value. We never got to the ETH high. What about that ETH low? What about the ETH low, Tom? Well, there's over a 90% probability we take either the ETH high or low. Well, we didn't do that. And there's over 90% probability we take the first hour's high or low. Well, if that's too high and that's the first hour's high, do you think we're going here? Maybe. How about this? Or do you think you want to be taking only shorts to go towards this? And do you think, wish I knew what to think, that we might come down in here? 25 is the next target, by the way. It is this level right there. Not a recommendation, or 25-ish. It's posted in Trader Lab. Market can keep going. Doesn't matter. If you're in Trader Lab, what would you be doing? If you're not in Trader Lab, are you thinking this way? Are you able to trade this way? And the other thing is, do you think visiting the Trader Lab might give you something that you don't have today? A roadmap, a better understanding of how the market works. And yes, you're still going to take stops, have losing days. We all do. So, casinos pay the gamblers, but it's not a validation of their intelligence or self-worth. It is overhead and cost of production. Do you think you can differentiate? How do you do that? Plan. Statistics. Edge. So next target. And that's about it. Please give a like if you're visiting in YouTube. Hope you're getting something from this. Remember, if you ever wanted to try Bookmap, there is a sale going on, the Black Friday sale. It ends at the end of the month. Looks like we're still going south of the border. What do you guys think? Let's see if I got any levels down here. Oh, I do. This is an important area out here also. So this, now here's the other thing. You could be done, and it doesn't matter. If you think it matters, and in hindsight you're going, oh, I should have stayed in, that's the lunatic. I call that Hyde. You've heard of Jekyll and Hyde? Hyde, everything's clear in hindsight. Anyway, hope you got something from this. Please leave a like. Use the link in the bottom of YouTube if you want to visit Trader Lab. There's no cost. It's a great community. It's for serious traders who are looking to move the game forward for themselves, potentially establish sustainability in the business. It's not romper room. The other thing I have to remind you is there's a Black Friday sale going on right now. If you ever wanted to acquire Bookmap or get your toe in the water, this is the time to do it. You can go to bookmap.com, check out all the configurations and what might be advantageous to you. Appreciate you visiting the lab. Don't forget to give a like on the way out. Appreciate your time and interest. Thanks so much for stopping by. Thanks for visiting Trader Lab. Talk to you guys soon.